Greetings everybody, Sive here with the ForexPeaceArmy.com. Let's have a look again on the euro currency. As usual, today we prepared a weekly report. I put the link down below in the description as usual. And I think that in today's report we have touched really very important topic. So we're not considering here's the actually mutual harm on both parties in the war, but we are mostly interested in how this particular event will make impact on the economy, in particular speaking on performance on the euro. So we have discussed major driving factors. Also, we mentioned some changing in the sentiment in Europe on the background of this conflict. We think that's important. Also, some important events just have been missed by the wide market society and the just big flow of the military and war news, but they are also very important. And we show how actually the length of the conflict could make 180 degrees different impact on the economy, on the European Union. Particularly speaking, short-lived conflict with a big jump in the price could trigger some inflationary issues, while the long-term conflict with the high price of oil could trigger vice versa deflationary impact, just because this will slow down the economy. So by our view and by some things that we know about this conflict, we suggest that market underestimate the potential length of this particular war. We think that it will be longer than market expects to get. And that makes us think that in the nearest few weeks, euro should remain under pressure, at least currently. When this coming week, next week, when the conflict is lasting just for 2 weeks, will be. So we do not see actually the reasons why the short-term sentiment in the market could change. Euro currently is following directly with the price of the energy. The direct relation currently stands. And on the next week, probably it will remain on the same factors as it stands right now. So we suggest a pullback in the beginning of the week, but at the same time, currently the chances on the real sharp reversal in the euro currency seems low. The only thing that could trigger it is really drastic changes in geopolitics. If we will be wrong and conflict will be over earlier than we think. So let's go back to the technicals. Speaking about the technicals factors, so here we have euro at oversold area, not only on the daily chart but on the weekly as well. And currently, euro currency stands at the weekly 30% support. Despite that, we have bearish trend direction based on the MACD as on the weekly chart as on the daily. We have bullish stretch pattern, which is a directional pattern by the chart Napoli. And according to his terminology, the direction overrules trend. So the factor, the pattern means more, it's overcome the direction of the trend, so the trend direction, better to say it this way, which means that the pullback here seems very probable, especially on the background of the poor payrolls. The vibe of these payrolls is still in the air, so in the beginning of the week maybe we will get some bounce. In a normal situation, usually we could count on a pullback somewhere to the 30% level, 1740. So since market is oversold strongly, stands at weekly support, the pullback at least to the 30% level seems probable. So currently I would consider this level 1714, 1740 at the first approximation of the possible retracement. Besides, on lower time frames we have some additional background for this pullback on a 4-hour time frame chart. Despite that we were correct on the breakout of this minor consolidation, if you remember, we talked about this triangle. We said most probably it will be broken down, and indeed it has been broken down, but the poor payrolls numbers has stopped euro on the way down and triggered this pullback. But as a result, we've got the Polish grabber. It suggests the upward continuation. This is first factor. On a 30-minute chart or on an hourly chart, another pattern that could be used and could be actually work as a continuation of this strategy, it might be the reverse head and shoulders that we have here. It might be formed right on Monday. Also, we have here this Gartley steeple to buy, but mostly it's already is done, just because here is more than 30% retracement of the whole pattern. So if you have the bullish view, or better to say, if you're scalp trader and trade on very short-term charts on hourly and below, you could think about using this context. Because honestly speaking, guys, the euro currency either has to show the pullback right from this level, or it will not show it at all. Why? Because if you take a look at the 4 time frame chart, next target stands at 1420 area. So it will be too far to wait when the market will complete it and then starts to pull back, because here's very short-term combination of the factors. So market has to use it right here. Besides, don't forget that we at the oversold levels. So that's background is ready actually for a pullback. If market will not do this, it means that the overall external pressure as geopolitical factors are rather strong, that totally destroy and depress existing technical factors, which means that we will be ready to downside continuation. And in this case, this performance probably will turn to the some sideways channel that increase signs of the bearish dynamic pressure, and later will lead to the drop as soon as market will leave the oversold condition. That's two scenarios. For the bears, currently at this point, I see nothing to do, because if we will be correct with this setup, it means that we could wait at least until the 117.17.4 area before considering taking new shorts. So at this point, for the bears, not enough context for taking the position. Better to wait. If we will see that market, as I said, turns to sideways continuation instead, in this case we will be watching for just taking the position somewhere near the upper border of the range. Don't forget also that next week we will get the personal consumption expenditures and CPI. It's not very representative right now, but still it could make impact on market sentiment, especially if we recall how bad the payrolls was, and if we recall how high the PPI numbers was last week. So combining it all together, it could be the meaningful factor for the market. That and towards what we have as a bottom line. If you scalp trader and you thinking about taking long position, that's the setup that you could use based on the weekly stretch, based on the oversold, based on the current minor patterns that are forming. If you have the bearish view, we think that in the current points nothing to do, and we should wait for higher levels to consider possible position taking.